While you're watching this video, millionaires are quietly stacking Bitcoin. And no one is telling you why. What do they know that you don't? Stick around, because missing this could cost you everything you see. It's no secret that crypto has had a rough year. In fact, the entire market cap is down more than 60% from its all-time high. But you would not know that by looking at Google Trends, because people are still searching for how to buy Bitcoin more than ever before. So what are they buying? Well, that's what we'll discuss in today's video. We'll be talking about the new Bitcoin dip that nobody saw coming, the insane amount of money being poured into this, and finally, the one metric that predicts where the bottom will be. So make sure to save this video for yourself and don't forget it till next year. This is important. Taking a look back, it's no secret that the last 2 years have been a roller coaster for Bitcoin. There was the dip in early 2021, then the all-time high of almost $70,000. Then the market crash with the collapse of Terra Luna, followed by 3 months of bear market. But here's the interesting thing. During these dips, there's always an increase in search volume for where to buy Bitcoin. Now, when you see an increase in search volume, that means that more people are interested in buying. And this is exactly what happened in 2020. Search volume increased dramatically during the March 2020 crash. Now, why is this important? Well, think about it. When people are scared and they think the world is ending, that's when the rich are buying. And this is exactly what we're seeing right now. People are terrified. The stock market is dropping and inflation is at record highs. And guess what? The rich know something that you don't. And if you want to make money, you need to understand what that is. But first, let me ask you a question. What do you think is the best way to invest in Bitcoin? Is it through a Bitcoin ETF? Is it through a Bitcoin mining company? Or is it just buying Bitcoin directly? Well, according to these multi-million-dollar asset managers, the answer is clear. They've been dumping their stocks and pouring money into Bitcoin. Take BlackRock, for example. At the end of June, they bought $550 million worth of Bitcoin. And in July, they doubled down and bought another $89 million worth. And just recently, they bought another $147 million worth of Bitcoin. That's a total of $231 million invested in less than 3 months. And they're not the only ones. Just yesterday, we talked about how hedge funds were buying Bitcoin for the first time ever. And a few weeks ago, we talked about how Michael Saylor and his firm, FinanceUS, bought another 420 Bitcoin. So, what exactly does this tell us? Well, the fact that these massive institutions are investing millions into Bitcoin tells us 2 things. First, they believe in Bitcoin because they wouldn't invest so much money if they didn't. And second, they know something that you don't. You see, when these companies buy Bitcoin, they don't just throw it in a wallet and forget about it. They actually lend it out to mining pools, who then use it to generate even more Bitcoin. This is known as Bitcoin mining, and it's actually the largest way that new Bitcoin enters the market. In fact, since the beginning of this year, miners have bought nearly 15,000 Bitcoin. And guess what? It's profitable for them to be buying right now because they know something that you don't. You see, Bitcoin mining is a lot like a business. To make the most profit, you want to buy low and sell high. When the price is low, you buy new mining equipment. And then when the price goes up, you use that equipment to generate even more Bitcoin, which you can then sell for a profit. This is why we're seeing so many mining companies buy Bitcoin right now. They know that the difficulty is about to drop, which means that they'll be able to generate even more Bitcoin for the same amount of electricity. Speaking of difficulty, we all know that mining is extremely difficult and expensive, so much so that most people can't do it themselves. But what if I told you that you could get a piece of the action without spending millions of dollars? Well, you actually can. There are companies that allow you to buy a share of their mining hardware. So instead of buying Bitcoin directly, you can buy a share of a miner, which makes this a lot more affordable. In fact, some platforms allow you to buy shares with as little as $10. And that's why people are looking at this option more than ever. As you can see, interest in mining Bitcoin has reached an all-time high. But the rich know something that you don't, and that is that a new Bitcoin dip is coming. You see, it's no secret that the Bitcoin hash rate has dropped significantly due to the recent China crackdown. This has actually caused the mining difficulty to fall. But this won't last forever, because the network adjusts the difficulty every 2016. Blocks are roughly every 2 weeks. And since the Chinese miners have gone offline, the difficulty is going to skyrocket, making Bitcoin mining unprofitable for everyone. And that's why we're seeing so many miners buying Bitcoin right now. In fact, the next difficulty adjustment is scheduled for November. And based on the current hash rate, the difficulty is expected to drop by 25%. But here's the thing. It could be even worse than that because the rich know something that you don't. You see, there is a good chance that the hash rate will continue to drop because American and European miners are turning off their machines. You know why? Because electricity prices are hitting record highs. And when this happens, they simply can't compete against the cheap Chinese energy. This is why I say that the rich are getting ready for a Bitcoin dip. They know that fewer people will be mining, which means that the supply of new Bitcoin will go down. And if demand stays the same or increases, this could drive the price higher. And that's exactly what happened in 2020. After the halving event, the difficulty dropped, but then it recovered and hit a new all-time high just a few months later. So if you want to take advantage of this, here's what you need to know. You see, there are two ways to profit from a Bitcoin rise. You can either buy Bitcoin or you can buy shares of a mining company. But what if I told you that you didn't have to choose one or the other? Well, you don't. There are companies that allow you to buy shares of Bitcoin miners, which means that you get exposure to both Bitcoin and the mining industry. And here's the best part. You can do this with as little as $10. Let me repeat that. You can buy shares of a Bitcoin mine with $10. And once again, this is a great way to get exposure to the entire market, because when Bitcoin goes up, your shares go up. And when Bitcoin goes down, your shares also go down, usually less than the actual price of Bitcoin. Of course, there are risks involved, but the same is true for everything in life. If you want to learn more about this, check out the links below. But now let's talk about what this means for you. What should you be doing? Well, first of all, don't panic. Even though the market might seem unpredictable, there's actually a simple explanation behind every single dip. For example, in May of 2021, Elon Musk said that Tesla would no longer accept Bitcoin payments because of the environmental impact. This caused the price to drop by 50%. Then, in December, the SEC rejected the Bitcoin ETF application, which caused the price to drop by another 30%. Then, of course, we have the recent Terra Luna collapse, which caused the entire crypto market to drop by more than 50%. So my point is this: every dip has a reason, and if you understand that reason, you can predict what will happen next. For example, when Elon Musk tweeted that Tesla would no longer accept Bitcoin, he was concerned about the carbon emissions. So all you had to do was look into renewable energy to see where this was going. Then when the Bitcoin ETF was rejected, it simply meant that there was too much manipulation in the market. So all you had to do was look at trading volume to see if that was the case. And when Terra Luna collapsed, it was obvious that the entire market was over. All you had to do was look at the futures market to confirm this. So my point is this: if you want to be profitable, you have to look beyond the price chart. You must understand the fundamentals, the technology, and the people behind the project. If you can do this, then you can make a lot of money. And that's why the rich keep buying Bitcoin while everyone else is selling. They know something that you don't. If you understand this, then you can make a lot of money. And if you want to learn more about cryptocurrency, I'll see you next time.